tell me when it's time to start.
Oh, right. Okay. Hello, John.
That's it. We start with a fanfare.
Dun, 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 dun.
We're now live. So welcome everybody. My name's I'd like to introduce
Morning.
Good morning everyone.
Morning, sir.
The other members present are Adrian Axford, John Hobart, Michael Patrick, Michael Lilly, Michael Merrill, and Chris Cross.
Hey.
If there's any of those who aren't here, would they let me know? Right, thank you. We go straight into our agenda item 1, the minutes of the meeting held on the 28th of December 2020. There's no issues been raised in advance. Has any of the members got anything they want to bring up and make any alterations to it?
No.
And I take it that we all agree with the minutes of the meeting held on the 28th of September.
What date was that, Reg?
28th of September.
Yeah, I confirm.
Yes. You did say December the first time.
Did I say December? I'm sorry.
Yeah, doesn't matter.
I've got 3 young ladies here telling me
Lucky you.
That's item 2. Agenda item 3. Members of the public are invited to submit questions in writing to the meeting. No questions have been received. Are there any out there? Can we take that as no? Right. Is there any declarations of interest from the members that they haven't already declared?
No.
No. No. Thank you. Item 4, reports of the external auditor, Ernst. These are going to be noted.
Good morning, Chairman. Hello,
Right.
Chairman. It's Helen from EY, and I'm joined by Jack Dunkley, who's popped up on his camera, and hopefully David Wight, who will also pop up on camera in a moment. So, Chairman, just to respond to the earlier comments about the timing of this committee, I think, and this committee was brought forward from December so that we are in advance of the 30th of November deadline for publishing accounts on the Council's website. This the deadline has previously been the 31st of July, but because of this year's sort of complications, the deadline was moved to the 30th of November, hence the timing of the meeting. We have 2 reports on the agenda that set out the results of the findings from our audit work. My plan is firstly to talk through the report for the Council, and David will support me in that one, and then we'll pause for questions or comments on that report from members before we move on to the report that relates to the pension fund, which Jack will support me on. So I trust that's okay, Chairman.
That's fine.
Okay, lovely. So as I said, the report sets out the findings from our audit work. I think it's probably fair to say that 2019-20 has been a particularly complex year for everybody, both auditors and for the Council. And from an audit perspective, there have been some significant challenges arising from the complexities of COVID-19. And that was recognised in the extension of the deadline for the publication of accounts on the website to the 30th of November. The two probably the 2 most significant impacts have been for the Council on one was the valuation uncertainty that was placed over the valuation of property, plant and equipment investment property assets by all valuers at the behest of RICS, if I get it right, the Royal Institute for Chartered Surveyors. And that led to a requirement for us, so within the firm, that we needed to use our valuation specialists to provide support to the team where we had material balances, particularly in relation to investment properties. So that was the first area. And the second area has been an increased focus on the disclosures around going concern. And then that led to the changes in the focus and the risks that we had identified in our work, which we reported to the July committee meeting. Pleased to say that based on the work that we've completed, we are expecting to issue an unqualified opinion on the financial statements and an unmodified value for money conclusion. And we're hoping that that will be before the 30th of November. We can't certify the audit as closed because we've received 2 objections to the financial statements. We do not judge those matters to be of such significance that they could have a material impact on the council's financial statements. And that's why we feel that we can complete our work to issue the audit opinion and the value for money conclusion. However, there is more to do for us to be able to communicate our findings on those objections. And because that work is still ongoing, whilst I'm sure members may be interested in that, there is not going to be an awful lot of information I can share on this call about the details, but we can obviously touch on that. I'll now ask David to take you through an update on the outstanding matters that were set out in our audit results report and briefly summarise our findings in each of the risk areas. So David, if I could hand over to you, please.
Thanks, Helen, and good morning, members. So if we go to page 19 of the reports pack or page 7 of the EY report pages, that page there was setting out the status of the outstanding work at the point in time that we submitted the report into papers for the committee. The first bullet point to summarise everything there is now done other than some residual documentation around property, plant and equipment valuations. So investment properties, the NDR appeals provision, pensions and payroll are now completed. The review of the authority's going concern assessment is also now completed and has gone through the internal consultation process as of the end of Friday. That is what I think has given rise to the additional paper that was being discussed earlier that's been circulated this morning, potentially because we did only get to a point of knowing with certainty what that wording needed to be saying at that point on Friday. But as you'd recognised, it's substantially the same as what was in the draft, the version of the accounts that you've seen as part of the paper pack anyway. As Helen has said, the work in relation to the 2 objections which have been received remains ongoing. Under the heading then of work in relation to the conclusion of the audit, the bulk of our completion audit conclusion procedures are now done. The review of the final version of the financial statements is substantially complete as well. Subsequent events review is ongoing, but that has to be ongoing up to the point when we sign off the auditor's report. The management representation letter will be received after this meeting. And the work on the whole of government account submission is also substantially complete because the authority is below the threshold for that work, so no detailed procedures are required. If I then go on to section 2 of the report, which starts on page 23 per the papers pack, this takes you through the areas of risk which we identified for the audit. So to briefly summarise the findings of each of these, the first is on page 24, the risk of fraud in revenue and expenditure recognition. And particularly here, we focused on the potential for inappropriate capitalisation of revenue expenditure. The work which we undertook, which focused on testing of property, plant and equipment additions and journals, has not identified any indications of fraud in that area. Moving on to page 25, the risk of misstatements due to fraud or error, sometimes also referred to as the risk of management override of controls. This is a risk which we're required to identify on all audits under the ISA, and we undertook the programme of work set out in the what did we do part of the page, and again to summarise, we have not identified any indications of fraud or management override of controls. On page 26, the third significant risk is the valuation of investment properties, which Helen's already sort of touched on. This was one of the areas where we increased the risk level during the course of the audit due to the potential impact of COVID-19, and that's as was reported in the audit plan update to the July committee. We used our internal specialists to assist us in the review of all of the council's investment properties because there's relatively few within the portfolio, and no issues were identified around those valuations at the balance sheet date. The valuation of land and buildings then is the first of our other areas of audit focus. So this is an area of higher inherent risk, but not significant risk. Again, we used our internal specialists to assist us with the review of properties which are valued at existing use value. So with regard to market factors, again, because of the potential impact of COVID-19. And again, to summarise, whilst there is some residual documentation to be completed in this area, no issues arising as it stands. None expected, I don't think either. Going concern disclosure then on page 28. As Helen has mentioned, again, this is an area of increased focus as a result of the potential effects of COVID-19. We have agreed an extended disclosure around going concern, which is what you will be seeing as part of the financial statements item. And again, that's been fully agreed now. It's been through the internal consultation process. And there were no matters arising there. No emphasis of matter paragraph is required in the auditor's report in respect of going concern. PFI accounting, the next area of audit focus, page 29. We undertook the programme of work that we set out to complete, and there are no matters to report as a result. Pension liability valuation on page 30. This one, there was some movement after the balance sheet date in respect of the McLeod judgment, which was in relation to age discrimination and which had been taken into account in the prior year, but there'd been greater clarity as to the potential impact of that following the 31st of March this year. And as a result, we've agreed an adjustment to the accounts to take that updated approach to how the McLeod element should be accounted for within the overall liability into account, and that's been factored into the final version of the financial statements. But it's probably important to say that that's not an error in the initial version of the accounts, to say that is further information that's come to light after the balance sheet date. And then moving on to the last couple of areas of focus. So on page 31, the business rates appeals provision. We reviewed the approach that was taken to that this year, which involved the reliance on an external specialist, and there were no matters arising. And then the last one is the minimum revenue provision. So again, we looked at the work that we did a couple of years ago through our internal specialist when the authority changed its approach to MRP. We've updated that work and considered the current year figures with no matters to report. The other area to just bring to your attention in terms of areas of risk is in section 5 of the report. So if we move on to the papers pack, page 43, this is in relation to the value for money risk which we identified around progress against the authority's medium-term financial strategy. We undertook the work that we set out in our audit plan. And again, as Helen has said, we intend to give an unmodified value for money conclusion as a result. And you can see the detail of the findings there on page 43. That consideration covers the period to the 31st of March 2020. But we did look at the potential impact of COVID-19 in the sort of period to the end of March, but there was no new risks arising from that, or substantive changes to the work that we said we would perform in the audit plan as a result. That's probably all I would say in terms of the areas of risk.
Thank you, David. Chairman, at this point, I think it's probably better that we ask if there are any questions or comments from members of the committee and we respond to those.
Are there any questions on that? Adrian.
Yes, first of all, a general question to Helen, please. The delay to signing off the accounts, it seems, is due to you weren't able to solve the problem of the objections to the financial accounts for a long time. But now you've decided that even if we had to change the accounts to reflect those objections, it wouldn't be, the amount of money involved wouldn't be big enough to be material in terms of the total value. Is that fair to say? Yes,
that's a fair summary, Councillor Axford. So in terms of completing the accounts, the objection was a part of it, but to be fair, there was also the pressure the impact of COVID-19 and the firm's response to that, i.e. the requirement to use our specialists, has put significant pressure on our valuations team. It's obviously a specialist area, and it's not easy necessarily to suddenly double the size of the team, which is probably what would have been needed. So I think we would have been running towards the 30th of November deadline anyway. But you are quite right. We needed to carry out sufficient work to consider the matters raised within the objections and to make an assessment as to whether or not there could be a material impact. So we're looking at it in terms of the materiality levels set out within the report. And could there have been such an impact on the statements, and we concluded there was not.
Thank you. Could I ask a question to David, please?
Certainly.
Sure.
So a couple of things really. The going concern, again, that's something which has delayed things until the last minute. In a nutshell, I know we've had the papers through this morning, but it's like trying to spot the difference between the old version and the new version. What has actually changed on that? And the other thing is, you mentioned in the pension fund, because of the McLeod changes or rulings, that you had to look at that. But surely doesn't that come under the pension fund accounts rather than the council accounts?
So yes, no, you're right. The changes between the version of disclosure that you've seen this morning and the one which is in the draft accounts are some minimal tweaks, really. It was that we weren't able to say at the point in time when the statement of accounts had to be submitted into papers, because the consultation process on our side was still ongoing, that would be the final version. And there were some minor suggestions around but they are quite small, as you say, between the version that's in the accounts and that final version. But until the consultation process was fully completed, we weren't at a point in time to then say, so I sent across a final version of the wording as soon as I could. And that's what's been shared to you this morning, and that's what will be reflected in the final version of the statement of accounts. On the McLeod issue, it's because it impacts the pension liability, which has to be disclosed within the council's balance sheet. So it impacts the overall liability that the council has to the members of the pension fund, that it carries in its balance sheet for its current and former staff, and that's why that has to go through the council's accounts, because the liability on the pension is reflected there, and hence why the report was rerun and then the new figures were factored into the final version of the statement.
Okay, thank you.
Chris, you had a question, Chris?
Yeah. Sorry, just unmuting. Yeah, I haven't had a chance to really sort of compare the two sets of documentation, but on page 13 of the original, at the top of the page, it says the financial statements as a whole are not free of material misstatements. And then it goes on to sort of say it's all okay. Can you explain that?
Sorry, Councillor.
Sorry, I was on mute. So yes, just bear with me. Sorry, I'm going back to page 13.
Page 13 of your original document. At the top of the page, it reads, the financial statements as a whole are not free of material misstatements.
Yeah.
And then you go on to say that everything's okay. And I didn't see those as being quite mutually compatible.
No, understand. That statement at the top of the page on page 13 or page 25 per the papers pack is that's describing what the potential risk is. So that's not what our eventual finding was, but that is the risk which we then undertake a program of work to try to determine whether that risk has actually occurred. So if the risk of misstatement due to fraud or error had actually sort of come to fruition in effect, then the impact of that would be that the statements were not free from material misstatement, whether caused by fraud or error, but that is trying to describe what the risk is rather than what our findings were in respect of it.
Is it?
Sorry, Councillor, I think you may be on mute.
You're muted, Chris. Chris, you're muted. You're muted. Ah, that's better.
Can you hear me now?
Yes, here you now.
On page 25 of the original document, left-hand column, the last sentence, we're not required to consider or have we considered whether all aspects of the authority's arrangements for securing economy, efficiency and effectiveness in the use of its resources are operating effectively. How can you do an assessment of value for money if you don't take account of some of those issues?
So, Councillor Quirk, to pick that point up, that is in our audit opinion, which is relatively standard wording, as I'm sure you'll be familiar with from audit reports. I think it's important to remember that what the requirement is in relation to value for money is for auditors to assess whether the council has proper arrangements in place to secure economy, efficiency and effectiveness. And looking at proper arrangements is not the same thing as drawing a conclusion as to whether or not the council is providing value for money. And that's what that sentence is trying to get across. It is, I think probably it would be fair to say that it is relatively confusing in terms of the fact that we say that we give a value for money conclusion, but ultimately what we are required to do is look at proper arrangements. And I think that was what has led to a number of the discussions that then fed into the outcomes of the Redmond review around value for money and whether or not auditors were in fact doing the right work around value for money. At the moment, we're doing the work that we are required to do under the NAO Code of Audit Practice. But as I think we've probably mentioned at previous committees, the Code of Audit Practice is changing for the 2020-21 audit year. So from the 1st of April 2020, there is a new Code of Audit Practice and there will be a new requirement on auditors around value for money reporting, which will then change probably the way in which we report in our auditor report as well. But in all fairness, we haven't done a huge amount of work to start to look at what that will entail yet, because we've been very much focused on trying to close out 1920. But I hope that helps part explain that sort of and answer your question. Sorry.
Thank you. So wait for the future. Thank you.
It is really, yes.
And sorry, just to come back to Councillor Axford's question around changes to the going concern wording. I was just finding my version with the track changes, and I think the main ones were just an additional sentence about reserves, which is about 4 paragraphs from the end, and an additional sentence about the cash position, which is just a couple of paragraphs up from the end. But otherwise, as I say, it was substantially the same.
Thank you. Councillor Lilly.
Thank you. I apologise, Chair, for being late. It's taken me a long time to get into the meeting, but Sarah helped me, so I got in. I came in at the end. I apologise to your talk, particularly I think mentioning the investments that was made through the 100 million money that was borrowed or drawn down from. For that, and I'd have a specific question around that. A recent report, October 2020, from the Financial Reporting Council reviewed local authority audits and in particular noted it was disappointed to identify a need for improvements in respect of work on property valuations, since cash-strapped councils rack up large debts and turn to risk investments to offset funding cuts. Although the same report did recognise you specifically as auditors for areas of good practice and a firm taking the lead in its use of internal specialists for both property and pension valuations, the question must be asked, that I'm asking, is how really safe are the Isle of Wight stakeholders and our investment? Thank you.
Okay, thank you, Councillor. I'm I would say that is not necessarily a question for us to answer as your auditors, and that might be better directed to one of the finance team. So I think Kerry is on the call. Absolutely recognise that the FRC report flagged that particular issue around sort of the more extensive use by local councils of investing in property. It's not our role as your auditors to challenge any investment decisions as such, although we will obviously look at whether or not they are based on sound decision making and governance process, and that is something that we would take into account when we're looking at the value for money arrangements. It's not something we have flagged as a specific risk for Isle of Wight. But in the value for money conclusion work that we did this year, we did do some work around looking at the council's proposals around increased commercialisation. So in that sense, again, I refer back probably to my earlier answer around value for money arrangements. I think under the new code of audit practice, I suspect there may be more overt reporting by auditors, in part due to the new code, in part due to what the FRC was saying in its first report on public sector audit in those areas. I don't know, David, if there's anything you would want to add at this point, or whether I think Kerry is on the call and whether it might be something Kerry might want to also comment on.
I don't think there's a huge amount that I would necessarily add, Helen, to what you've just said. As you say, we do consider the council's kind of commercial or potential commercial activities as part of the overall risk assessment for the value for money. And we did look at some of the processes that were undertaken to approve purchases of the investment properties when they were made, which I think was principally sort of in 1819. But there have been no further purchases in the 1920 year.
Thank you, David. Do you want to come in, Kerry?
Thank you, Chair. Yes, just for clarity, the £100 million that Councillor Lilly's referred to is the borrowing approval envelope, but we haven't actually obviously drawn that money down yet because we've only invested in 4 properties, which have a value of 33 million. As with any investment, there is always an element of risk, but we try to mitigate that risk by having a strong partnership with Portsmouth City Council, who have experts in the actual procurement of these types of investments on our behalf. And they work very closely with the Director of Corporate Services to make sure that we only invest in properties where there is very strong covenants and good tenants that have good track records. So that's our way of trying to mitigate the risk. And as Helen has already mentioned, we haven't made, or David, we haven't actually made any investments since our initial 4 purchases.
Thank you, Kerry. Is the committee happy to note both those reports? Thank you.
Can I just make
Chairman,
a comment on that last question? Michael Lilly is obviously worried about the value of the investments, and as Kerry has just said, they're not just off the back of the envelope decisions. They do look into the question of profitability and so on. And although the property market has suffered over the last year or so, particularly, this is mainly in the sense of retail premises, not the kind of premises which the Isle of Wight Council has invested in, where in fact as Kerry's just said, of the 100 million possible investment, we've only used a third of that. And in fact, I think the door is shut on that kind of activity at the moment. But we have made considerable income, and we have, in the valuations, we've kept the valuations at cost rather than trying to put in any new valuations, which in some cases could actually be higher than the original cost.
Thank you. Helen, do you want to come in?
Yes, sorry, Chairman. I think we haven't discussed the pension fund audit results report that starts on page 67. So would you like us just to run through the findings on that one?
4B, I'm sorry, I thought you'd touched on that.
No, sorry.
Yeah.
We confused you by talking about pensions, I think.
You did. To be fair, you did mention pensions.
Exactly. So
we'll wait and note both of them together then after we've done all. Thank you.
Okay. So turning to the same report, but for the Isle of Wight Pension Fund, there is clearly the same overarching impact of COVID-19, but due to the nature of the operations of the pension fund, some of the complications were less of an issue. So, for example, we didn't need to take into account so much work around the RICS valuation issue, but we did need to do some around going concern. I won't do such a lengthy preamble. And based on our work, we intend to issue an unqualified audit opinion on the pension funds. And we can close that audit as it's not impacted by the objections received, and it is a separate opinion, albeit linked to the council. As for the council, I'll ask Jack just to touch on the areas of work that were outstanding in the report at the time, and to just briefly talk about the risks that we addressed.
Cool, thanks, Helen. So if we just start with the status of the audit, which is on page 71. So as with the main council, the going concern consultation is now complete, and we're satisfied with the level of disclosure in the pension fund accounts. The other two items on that list, so receipt of the letter of rep and subsequent events, are just items that we complete after this audit committee. So very much in a position where the audit is now complete. And then if I just kind of quickly take you through the risks. So the first risk is on page 74, which is the risk of misstatement due to fraud or error. So this is a risk that we're required to recognise as part of ISA 240. And then ISA 240 essentially sets out a work programme that we need to complete. So looking at unusual items, completed journals, testings, and also looking at estimates. And as we've noted in the conclusion, we haven't identified any errors with that work. The second risk is then on page 75. So this is the risk of fraud in revenue recognition. Again, this is a risk that's required to be recognised as part of ISA 240. Again, we've completed the work programme as we set out in our audit plan and haven't identified any errors with this work. And then finally, the last risk is just on page 76. So as we already touched upon, due to the impact of COVID-19, we completed additional work on the going concern disclosure. This included and completed an internal consultation process, and just to reiterate, that consultation process is now complete, and we're satisfied with the level of disclosure in the pension fund accounts. I think just finally, I just want to say a quick thank you to Joe and the team for the help and support this year. The audit's gone incredibly smoothly, as it does almost every year. And also know that team's under a lot of pressure at the moment because there's the impact of the change to the investment strategy. I know there's changes to legislation that are going on at the moment as well as the ongoing impact of COVID-19. So I kind of understand that team is certainly stretched at the moment. So really just want to thank them for the support during the audit.
Thank you, Jack. Have you got any questions, Adrian? Adrian? Can't hear you.
You're on mute.
I keep clicking on and off. Sorry, can you hear me now?
Hear you now, thank you.
Right. So if I could just make a general point, which is that the audit report is not how well the pension fund is doing in total terms. It's whether the records are being kept correctly and whether all the items add up, and etc. etc. And we have got a very good team, and I'm very pleased to see that we've got an unqualified audit again this year. I would stress, and Jack will correct me if I'm wrong, every 3 years we do a revaluation of the assets of the pension fund, what we hold in stocks and shares and property and so on. And this is done on a very detailed basis. And this was done not the March that we're talking about, the year end, but it was done actually 12 months earlier than that. So the latest official detailed valuation is, 18 months old now. At that stage, we were in a very satisfactory position in terms of the liabilities, so not having enough assets to cover the liabilities. And then, of course, we had this last 12 months was more or less disastrous. We had a very deep reduction in the value, particularly of stocks and shares in the last quarter of the year we're just looking at now. But since then, the stock markets have recovered, and we're more or less back to the position we were 2 years ago, nearly. So the valuation is still very suitable. It's in the 90%, which is very high compared with most commercial pension funds. And I think that we're very pleased that we've got a clean audit report again, and it's thanks to the hard work. of those who work on the pensions department, all our officers. Thank you.
Thank you, Adrian. So is the committee happy to note both of those reports? I'm sorry, Ellen wants to come back again.
Yeah, Chairman, I just wanted to, it's not to say anything more than to echo Jack's comments, and thanks to the pension fund team. I would like to extend that more broadly to the finance team as a whole for their support throughout this summer on the financial statements for both the council and the pension fund. It's not been an easy year for anybody, and we are very grateful for that support. So I just wanted to make sure that was on record.
Yeah, I would absolutely echo that as well. Thank you very much to Andrew and the rest of the finance team, Kerry, for all the help with the council audit. It's as Helen says, it's been challenging. It's taken us some time to get to an end point on some of the issues that we're reporting to you on today. So I'm very grateful for their help and patience.
Thank you, David. Thank you. So we'll move on to item 5 now then. This is to approve the final accounts for 2019-2020. The principal accountant will be presenting the report.
Okay, good morning, members. This is Andrew Carpenter from Corporate Finance. So agenda item 5 very much follows on from the previous items on the agenda. For that item in your pack, you will see that there is a covering report and also Appendix 1 being the statement of accounts and an Appendix 2 being the narrative report. And of course, you'll also see that there's we've already heard discussed, received an amendment to be made to one of the notes concerning going concern, which is note 1.29 as part of Appendix 1. I'll now proceed, or I'll try to proceed if I can, to a short presentation which brings these various items together and provides some background. Is that something everybody can see?
Are we supposed to be looking at a slideshow?
Yes.
I haven't got a slideshow.
No, this should be on the screen now.
Not on my screen. Has everybody else got it?
No.
No, no one's got it. Sorry, Andrew.
No, can't see anything.
Sorry.
Is there something that
switch off?
You need to share the screen, apparently.
Yeah,
Yes,
Andrew, I
press-
think you've picked the wrong screen to share. That's all. If you click on the screen that if you've got more than one screen on at home.
Okay.
It's there.
You were there?
It's down the bottom. I see it, yeah. Does everybody else see it?
Yes.
Yes, Reg.
Yeah.
Right, well done. Yeah, if you click on that, it then comes up on the side. I've got 2 there. Right. I think we're all set now, Andrew.
Okay, I'll have a go at that. You're getting the sidebar as well, or just the main bit?
It's the main.
Okay, good. Right. So, as an introduction, and I'll be covering these main points, and there will be opportunity for questions at the end. So just a bit about the legislative background. So as you've already heard, the accounts and audit regulations under which we produce the accounts say that we must be approved by the 31st July. But due to the current situation, the government issued some regulations so that the actual date had been moved for the published accounts to the 30th of November, but also for the draft accounts, which is the ones that we give to the auditors, from the 31st of May to the 31st of August. So all the dates were slipped to take account of the current pandemic. The narrative report, which is Appendix B, is produced as a separate document and just needs to be considered alongside the main statement. So this is a chart which tries to show the different main parts of the statement of accounts. What we call the primary statements are the comprehensive income and expenditure account, the movement in reserve statement, and the balance sheet.
Sorry, Andrew, can I just say, I don't think we're seeing the slides as you were moving them on. We're still on the front page. If you just page down, I think you'll find that I should move them on. That's it.
Yeah.
Yeah. So we're on the introduction page now. Yeah.
You're still on the introduction page.
Legislative background.
Okay.
Should cover. That's it.
Okay. Apologies. The technology is obviously getting the better of me this morning. Yeah, so the main statements, as I said, are the comprehensive income and expenditure account, the movement and reserve statement, the balance sheet, and the cash flow statement. But in addition to that, we produce what's called an expenditure and funding analysis, a collection fund, the Isle of Wight Council Firefighters Pension Fund, and the Isle of Wight Council Pension Fund. But a lot of these, as the arrows suggest, all have interdependencies. We are required to produce the accounts under international reporting standards, which do introduce some complications for us. But all the statements all flow through into each other and are obviously consistent with the figures that we've reported. Okay, seeing the next slide. Good. Now, obviously the format of the comprehensive income and expenditure account matches the council's portfolio reporting structure. So when we talk about the council's budget, the actual outturn figures that we use, the comprehensive income and expenditure account follows the same format, but the CIES includes accounting entries such as depreciation and pension accounting entries, which we wouldn't normally account for as part of our budget. But as I say, under IFRS, we have to include them. But in order to get back to the true position, the movement in reserve statement and the expenditure and funding analysis bring those figures back into line with what we would normally consider to be the council's budget figures. So it's the same overall information, but just presented differently. And just a few words about the budget performance. So during the year, we had, I'll just go on to the next one quickly. We had an underspend, if you like, or a net saving against the budget target of just over 1.3 million. And that comprised mainly some overspends offset by some underspends. So in adult social care, for example, there was pressure mainly caused by the volume of care packages in children's services, pressure caused by additional cost of purchase foster and residential care, and in infrastructure and transport, pressuring car parking income and the timing of delivery of some of the PFI contract savings. There were some smaller unders and overs there, and then that was mainly offset by, within resources, we had some significant savings from Treasury management activity, the contingency and staff related savings. So to say, the overall position was an underspent or a saving of 1.3 million, which was transferred to the capital financing reserve at year end. So just looking at year on year and going back to the comprehensive income and expenditure statement, the gross cost of servicing increased by 9.4 million to 348.7 million. And just trying to sort of tease out some of the reasons. There's a lot of, as you can understand, there's a lot of ups and downs within that figure. But just the principal one probably was to do with in children's services, where we've got the schools revaluations, losses and depreciation. And we had the first full year of the Bay School. And in addition to that, we had teachers' pay and pension increases. On the other side of that, gross income has increased, as you can see, by 4.9 million. And again, that was mainly in children's services. Some of it's the other side of some of those cost pressures, and we had increasing grant funding, for example. So in terms of the overall income and expenditure account, we had an increase of 4.6 million compared to the figure in the previous years. But I'll say there's many other individual factors for those variances, not least the increase in the IAS 19 pension adjustment. Now the balance sheet shows an overall position where it's reduced the net deficit from the previous year by 59 million, which is good. Well, it was deficit. The deficit was larger in the previous year, and this is mainly we got long-term asset values have increased by 20 million, mainly due to increases in property, plant and equipment values relating to the highways and waste contracts. There's some more detail in note 14 for that. And short-term creditors, that's money that the council owes to others at the 31st of March, reduced by 12 million to 30 million, and long-term creditors increased by 14 million to 101 million. Now this is principally to do with the profile of the highways PFI contract, the lease liability on that. Just one or two other little things. There's the short-term debtors increased by 6 million. But again, that's very much a snapshot at the 31st of March because it included receipt of a VAT claim, which was paid to us in 2021, and also some money owed to us by the CCG, which again was paid in early April. So it was just a snapshot position at the 31st of March. And other long-term liabilities reduced by 52.6 million, mainly due to changes in the pension IAS 19 actuarial valuations, which has already been mentioned. The balances for short-term investments, cash and cash equivalent, short-term borrowing and long-term borrowing were covered separately in a Treasury Management annual report presented to this committee in September. So just a few words about council reserves. So the general fund balance increased by just over £1 million as agreed in the budget strategy that was set in February the previous year. Capital receipts reduced by 2.5 million. Earmark reserves reduced by 6 million. And we've got a dedicated schools grant reserve, which is actually in deficit due to the way that the dedicated schools grant works. But that's been recovered as a recovery plan to recoup that back to bring it back into balance. If the earmark reserves, that's mainly to do with the highways PFI contract cash flow reserve, which reduced by 18.6 million. And this was in line with the profile that was set out when the PFI contract was initiated 7 or 8 years ago. And the reserves earmarked for services increased by 4.2 million to 18.6 million. This is mainly to do with, we had a late payment to do with COVID-19. The government gave us a 5 million grant right at year end. So that was put into a reserve ready to draw down again in the current year. And the capital resources reserve increased by 7.6 million. And that gives us a resource to gives us an alternative resource to fund future capital expenditure. So those are all reserves that technically are available to us. There's also some, due to the way we got to present the accounts, we've got some what are termed unusable reserves, and those are mainly the pension reserve, the deficit. Having said that's reduced by 52.6, the deficit, so now stands at 247.7 million. The revaluation reserve increased by 3.7 million, and the capital adjustment account reduced by 14 million. But these all add up to a negative position of 115 million. But these reserves do not represent the resources, the usable resources for the council. They're to do with the accounting adjustments that we have to make. So in summary, so the final outturn position shows a saving against budget of 1.3 million. This 1.3 million has been transferred to the capital resources reserve to fund future capital expenditure. You've already heard the external auditor's report on the audit results. So members are now being asked to approve the 2019 statement of accounts to include the circulated expanded going concern note at 1.29. Members are also asked to agree that the chair of the audit committee sign the letters of responsibility when the date of the issue of the audit opinion is known. Normally speaking, that letter will be signed at this meeting, but the auditors have asked whether we can delay that signing until we know. They're hoping that, they've already said they're hoping to issue an unqualified opinion by the 30th of November, but the letters of responsibility need to be signed nearer to that date. Okay. So, invite any questions.
Any questions for Andrew? No questions? So is the committee happy to approve
Yes, Reg.
right? And also the bit about me signing the letter at a later date before the 30th of November. All those in favour? 1, 2,
Agree.
3, 4. John? Councillor Hobart?
In favour.
I'm sorry, Lottie's going to read out the names. Yeah. Okay. Right. Thank you, Lottie.
Councillor Barry?
Yes.
Councillor Ashford?
Yes.
Councillor Hobart?
Yes.
Councillor Patrick?
Yes.
Lily?
Yes.
The clerk?
Yes. That's unanimous. Thank you very much. We move on to item 6 now, the Council's risk profile. This is the report of the Assistant Chief Executive and Chief Strategy Officer.
Thank you, Chair. David Martin here. I'll give this report. The Strategic Risk Report and Register was reviewed by CMT in October. Relatively short time since the last presentation to Audit Committee, which was the end of September. As such, CMT made no changes to any of the risk scores. Of particular note to bring to attention to the committee are on Risk 1, which obviously reflects the current budget pressures and also has the mitigation regarding the deficit recovery strategy agreed following COVID pressures. On risk number 4, significantly, Council continues to support staff in the new ways of working necessitated by COVID restrictions, but also of note are the fact that staff sickness levels are consistently reducing and have done all year, even during the pandemic situation. And then on risk 12 regarding Brexit, this risk mitigation has been comprehensively updated by the Director of Regeneration. The Brexit Impact Group, which formerly was a subset of the COVID-19 Recovery Group, has now been stood up again in its own right and is managing a full risk register focusing on main themes such as port health and congestion and traffic around Portsmouth, food resilience, public health, medical supplies, cross-zone transport and supply of essential stocks, and also workplace impact in the care sector. And with that, I'd like to invite any questions on the risk report or on the appendix containing the full register.
Thank you. Are there any questions?
Ah, what's it doing?
Sorry?
No.
Has it gone wrong then? So there's no questions for David? No?
Sorry, I do have a question. I was just having difficulty with my paperwork because I've got electronic copy. I didn't receive a paper copy, so it's just taking me time to get to the relevant points. I apologise, Chair. Right?
We get back. Then has somebody else got a question? No, you're the only one with a question, Councillor Lilly.
Oh no, I'm just trying to get to it. It's such a big paper. It's taken me a lot of time to get through to the actual risk analysis, right?
Oh, it ain't right.
Right. I'm sorry. Okay, I'm with you now.
Right.
I particularly, we obviously have a number of clear reds, right? And I just would like to, if you could actually go through some of those reds, particularly the ones that are at 16, and to clarify mitigation on those. Right?
Did you get that, David?
Yes, I did. Bear with me.
So it's on page.
Yeah, the first risk that is at a level of 16 is around financial resource and our medium-term financial strategy, which is at high risk based on a number of factors. And Kelly would be able to add any comments if she has any, but the particular factors regarding the delay of the fair funding review and the 75% business rates retention. Obviously, there'll only be a 1-year comprehensive spending review and finance settlement this year instead of the 3 years that were initially planned. So it negatively affects the council's ability to plan far enough ahead. The other one at 16.
Sorry, could I come in a supplementary question on that one?
Yes, of course. Yeah.
What on the timing of this? We're into November, but we're soon into December, and we're heading very closely, obviously, to our putting our budget together for next financial year. What time do we need answers on these particular issues from government?
Yeah, can I bring Kerry in on this one? Yeah.
Certainly. Thank you, Councillor Lilly. Well, I mean, as Dave has already outlined, we were expecting a 3-year comprehensive spending review this year, but the government have said that due to the distractions and the uncertainties caused by COVID, that they're only going to issue a 1-year spending review, which is actually going to be announced on this coming Wednesday. But we won't actually receive the detailed local government provisional settlement until later in December. So we will still be going ahead and making the plans for next year's budget. But this risk covers the medium term, so that's broader than just next year's budget. This looks 3 years ahead. So the lack of the 3-year settlement just hinders our planning somewhat, and we won't be able to plan in quite as a certain way as we would have done had we been able to have the 3-year settlement. So in essence, we will get a 1-year settlement. We'll know the detail of that in December. It will be confirmed in January. and we are, it won't hamper our efforts to proceed with the budget planning in February for 2021-22.
So can I just supplementary, Chair? On that basis, Kay, thank you for that answer. What are we comparative with other local authorities who, because this is obviously a shared situation with other local authorities across the UK? And a lot of other authorities are going to be in a worse state than we are. Where do we sort of position in comparison with other local authorities?
Well, like you say, every local authority will be in this position, and it will very much depend on what assumptions everyone has made in their planning. So it's impossible to compare directly in terms of where we sit. But we are currently carrying on with our medium-term financial plan, which we agreed in February this year. We don't think the impact the 1 year settlement is going to have any significant impact on where we're planning to get to. It's still the very similar trajectory, as I said, to the medium-term financial strategy we agreed in February.
Thank you. Thank you, Chair.
Thank you. The committee are asked to approve the strategic risks of the council as set out in paragraph 11 and in appendix 1. We'll now move to the vote. Lottie will take the vote. All right. Councillor Axon.
Yes, I approve.
Councillor Hobart.
Approve.
Councillor Patrick.
Approve.
Councillor Lilly.
Approve.
Approve.
Thank you.
Thank you.
We'll move on to item 7, which is the procurement activity report for the half year 1st of April 2020 to the 30th of September 2020. Thank you. Who's taking this then?
Thanks, Chairman. That's me, Hayley Holden, Procurement and Contracts Manager. So, good morning, committee. We have here the half-yearly procurement and contract activity report for the period 1st of April 2020 to 30th of September 2020. I will talk through the main highlights of the report and then invite any comments or questions that the committee may have. So the report provides some context of the role of the procurement and contracts team within the council. The commissioning decisions sit with the service areas, and our role is to take their requirements, carry out a procurement process that is compliant with the relevant rules and regulations, to structure it in such a way that ensures we're running the most appropriate process for the requirement, which will result in the most appropriate contracting mechanism. We're nearing the end of the Brexit transition period, which will come to an end on the 31st of December this year. We've continued to follow the EU public procurement directives despite our exit from the EU. However, post 31st of December, we are not really going to see a fundamental change immediately, as the EU public procurement directives have been adopted into our legal system in the form of the Public Contracts Regulations 2015, and these will continue to apply until such time that our government reviews them. It's just been confirmed actually that the only change that will directly impact us immediately post-transition is where we need to publish our contract opportunities. Up until the 31st of December, we will continue to publish them in the official journal of the European Union. From the 1st of January, we will then publish in a new UK equivalent called Find a Tender. So paragraph 6 of the report sets out the volume of procurements initiated during the reporting period. Table 1 breaks this down by directorate. Interestingly, the figures have remained fairly static despite COVID compared to the previous reporting periods. You will note that whilst it isn't a directive, I have included a separate reporting line for procurement solely relating to the COVID response, as this activity has sat outside of the main directorate headings. Paragraph 7 shows the number of contracts awarded during the reporting period, and this is also broken down by directorate in table 2. Appendix A of the report provides the committee with the detail of each of those contracts and the value broken down by directorate. The total value of contracts awarded during this period is 29.9 million, which is quite a rise compared to previous reporting periods. This is because we've had some high value contracts awarded, such as 2 priority school build works contracts, which accounted for a combined value of 5.5 million, and the home to school bus services contract, which accounted for 10.2 million on its own. Paragraph 10 gives an overview of the number of live contracts that we have registered in our contracts database. With each reporting period, we've seen this number increase, particularly in the 2 previous reporting periods. This is due to the work that we've been doing within my service area in relation to contract management. This is populating the contracts database, making sure we were plugging some of the historic gaps that we knew we had. And we've also recently expanded the database to capture grant agreements and partnership agreements as well. At paragraph 11, we cover waivers of the council's contract standing orders. So this is where a service area will put in a request to not follow the requirements of contract standing orders as they are wholly prescribed. So that could be a request to waive advertising requirements, but to still retain an element of competition, or it could be for both. We've actually had a waiver during this period, which was waiving the requirement to seal a contract due to the timescales involved in the procurement. So they are not always about the competitive element of the procurement process. You will note an increase in the number of waivers at table 4. I've put a bit of narrative to this in paragraph 14. We've had a number of waivers that related directly to COVID response. And some of those that were required due to the wider impacts on the market. So, for example, we had to delay some of our procurements as the suppliers didn't have capacity to bid at that time. They were in the thick of frontline COVID response. So we thought it best to slightly delay some of our procurements so that we didn't have a failed procurement. Details of each of those individual waivers can be seen at Appendix B of the report. Paragraph 15, the report then covers off the procurement strategy and its action plan, which is included at Appendix C. As a result of COVID, we had to focus our resources on priority pieces of work, which has involved dealing with procurements and contracts to support COVID response work, a backlog of procurements that were delayed from early on in the pandemic, and trying to focus our remaining resource where we've really felt we needed to push, and that has primarily been on the rollout of our new contract management guidance and system. This has resulted in some of those other actions being slipped into early next year. So on to contract management. Paragraph 19 gives an update on the contract management system that we are working on. The new contract management toolkit is live and is being promoted to commissioners and contract managers, and we are busy working with service areas to load their contracts into the system and train them on the use of that new system. And going forward, as data is populated within that system, we will start to see that feed through into this report, so that we're not just focusing on the procurement activity, we can actually look at the performance of the council's contracts. Paragraph 26 then highlights some of the savings that we've achieved as a result of our procurement processes, along with a bit of narrative to give some context to those. That's an overview of the key areas of the report, so I will stop at this point and invite questions, if that's okay, Chair.
Are there any questions for Hayley? Thank you, Hayley. Are we all happy to note the report? Oh, sorry, Michael Lilly's come up with a question. Go on, Michael.
May I ask a question?
You can.
Thank you, Hayley, for the report. If I can actually draw to, I think it's Appendix A, where you actually list the contracts, and particularly linked to COVID-19 response. And I can see a number of PPE things. I mean, recently there's been within the press and through the government, speculation about a lot of government contracts going through middle people, right? And actually at a very high cost. Can you give me assurance that our procurement actually was done direct and we didn't pay with any of our costs middle people who made a large profit, right, out of the pandemic? I just wondered, I know that, for instance, select committees are looking into this. So from a scrutiny point of view, audit point of view, are we okay?
Thank you. Yes.
Excuse me, Michael, is that really a fair question for Hayley?
I think it is a fair question because I'm sure Hayley
And
can
I can
answer it.
I can. Yes. No, thanks, Councillor Lilly. So yeah, we responded quite quickly in sort of the early stages of the pandemic, and we were really fortunate that we were able to purchase PPE items through pre-approved central framework agreements. So these are framework agreements that the public sector are able to buy from. We can buy from them quickly. They are compliant with all of the relevant procurement regulations that we need to follow as a public sector body. All the suppliers on there are pre-vetted, so they've already been through quite a robust procurement process to even be on the framework agreement. So we were really fortunate that we were actually able to buy our PPE through a framework agreement. So yes, I can confidently say that we're not in the same position as others may have found themselves in.
Very good answer. Thank you.
No worries. Councillor Clerk.
Sorry, Chris. Can't hear you.
Yeah, we looked at some of the things about the number of waivers in children's services at Corporate Scrutiny Committee, and I actually had a session with officers after that to sort of look at what was going on, because it was a lot of money and a little concerning that they were doing it on waivers. Actually, I was quite satisfied when I went to it with officers that they were doing this still within frameworks, and it looked very it looked as if we were doing it in a very appropriate and professional way. However, some of the amounts of money concerned, one does wonder whether we are actually getting good value for money out of these.
Do you want to answer that, Hayley?
Yeah, Councillor Quirk, we met, didn't we, with the commissioning manager in children's services, and we looked at some of those waivers in a bit more detail, some of the context that sits behind them. So yeah, I know the placements team. It was something that we picked up on in our meeting, wasn't it, around the value for money aspect, and the commissioning team do benchmark rates against the framework costs that they would access under the main framework agreements. That is always that first port of call. So they are always satisfied that they are getting value for money. They also do challenge on occasion. So if they will challenge providers, and they will constantly review the requirements of the placement agreements to make sure that they remain appropriate, and we are only paying for what we really need to. So certainly the commissioning services manager that we met with was confident that they are doing that, and they have the processes in place to benchmark those rates to feel satisfied that we are getting value for money.
Yeah, I have no doubt that they're doing the right thing in terms of the framework agreements. Just when you're talking about £250,000 plus per child, it seems quite excessive, and whether there are alternative ways of providing that. But I accept your answer.
Thank you, Hayley. Are there any more questions for Hayley? Then the committee is happy to note the report. Thank you. We've now got a break for 10 minutes. Chris?
Just noting the report.
Okay, thank you. Are we all happy to break for 10 minutes?
Yes.
Yep.
Yes, Chair.
Yes.
Where do you, What's AGS? And what's there right in front of me, isn't it? Yeah. ETS issues. Audit.
Oh no. See, my I think it's because we've got too many members with their cameras on. Because it's saying the maximum. Although my camera does sometimes just turn off. So.
Well, them started yet,
Try
haven't
and go in that meeting. It happens to me lots of times. Okay, right. If you just click end, we're going to have to come out and meet. So hold on. Because actually that's.
Lottie, Reg, your microphones are on. We can hear everything you're saying.
I don't know whether you're there, Reg, but I think we could put in an application for a prize winning for the longest agenda in the world. It's 398 pages. We might get an award.
Councillors, this is still being broadcast live, by the way.
Who's that? Who was that saying, talking there? Is that you, Joe?
Yes, it was. Yeah, Adrian. But we are still live.
That's right. I haven't sworn, honestly.
Right. So can everybody hear me? Can you all hear me?
Yes, Reg.
Right.
Yes, Reg, we can hear you. Yep.
Well, we'll carry on without you. You'll have to miss seeing me, that's all. I'm sure you can put up with that. We'll move on to agenda item 8, annual governance statement and progress against previous AGS issues. This one's from Nota. This is the Chief, Assistant Chief and Chief Strategy Officer.
Hello, councillors. This is Debbie Downer. I'm bringing the report to you on behalf of Wendy Pereira, who's the Assistant Chief Executive and Chief Strategy Officer. The report is for noting, and the report gives members an update into the action plan from the annual government statement that you would have remembered seeing back in July. Within the report, there were 2 specific actions identified in the governance statement that we needed to keep an eye on and monitor progress throughout the year. The 2 issues raised could only be assessed and improved for improvement, however, as the audits were undertaken throughout the year, because the evidence from the audits will give us the evidence we need to know whether or not there have been a success in terms of improvements. So in terms of action 1, the governance issue that we identified was compliance with the financial framework. Audits throughout the year had identified gaps in the process that, whilst weren't significant, did show a pattern that needed to be monitored for improvement. So of the 15 audits that have been undertaken, 8 have now been completed and received full assurance. and also evidenced required actions within the required timescales, which is an improvement overall. And specific areas that can evidence actions that have been completed to agreed timescales are in children's services, adult social care, and with the GDPR action plan, which I know you must all be very familiar. I've just realised, I'm sorry, I've looking at it on a big screen, I've gone to the wrong page. So in terms of action 1, key audit refreshers to evidence improvements are the financial audits, and then specifically arrangements in managing cash at the sites. Now, the audit team are undertaking visits to review a sample of those sites between November and Christmas 2020, which of course is the period that we're in now. And this is when the evidence will be gathered and reported. CMT will receive follow-up audits as they do periodically from the audit team, and they will receive, we're hoping, a summary in relation to these before Christmas. Therefore, further updates will be available for the March Audit Committee. In relation to Action 2 identified in the annual governance statement, that action identified audits where timescales for improvements had not been met. In relation to measuring success for that over 2020, again, this would be evidenced from audits that are undertaken as part of that timetable. What we have found, however, is that the impact of COVID in relation to the pandemic has affected services' ability to be able to meet those pre-agreed timescales, many of which were set way before we knew that COVID was going to impact as it has. And what is important is that those delays and the reasons for those delays are effectively documented to evidence the formal reasons for those delays, and that it was in relation to the COVID pandemic and not other things where we may have had more control. So out of the 15 audits that have been done, 8 have been completed and 8 of those have now received full compliance in terms of assurance. So they have met the timescales that were pre-agreed in those audits. What can't be seen at the moment, though, is that this has been consistently met by all service areas. And what we've identified in the report here is those areas where progress cannot be monitored because the actions required aren't yet complete. And those are in relation to 3 areas in IT and 3 areas within property services. As indicated in the report, those areas are currently unable to evidence that all the actions from the audits have been completed. And again, they will be reviewed between December and January, so that any additional mitigating actions required as a result of those reviews can be established and evidenced appropriately. This will be reported to CMT and will be in the audit reports for March. So I'll give an opportunity for any questions. If there are none, I'll ask the Cabinet to note the report.
Thank you, Debbie. Are there any questions for Debbie? No? Thank you, Debbie.
Thank you for your time. Thank you very much.
We'll note the report.
Thank you.
Move on to item 9 now. To consider the report of the Director of Finance and Section 151 Officer. And this is Joe Thistle who's going to do this for us. Thank you, Joe.
I don't think it is me. If this is the internal audit reports, then it's Lizzie Goodwin. Item 9. The paper I've got there, it says Joe Thistlewood is in attendance to present the report.
Chair, the report is the report that actually goes out in your name. Joe's correct. It would usually sit with Audit. Mr. Newton, my colleague, is going to present this one for you. So the report should be Audit Committee Annual Report 1920.
I'm more than happy to let Gura went to it. Thank you.
Thank you, Chair. As Lizzie says, I'll be introducing this report on behalf of Internal Audit. This report is produced in line with SITFA guidance, but audit committees should periodically review their effectiveness. This is the report of the Chair on behalf of the Audit Committee, but the process is supported by Internal Audit. In prior years, this report has been informed by wider discussion with the Audit Committee. Due to COVID-19, for this year only, the report is informed solely through the completion of a self-assessment questionnaire completed collaboratively by Internal Audit and the Audit Committee Chair. Work to inform the 2021 report has commenced. Sorry, that should be the work to inform the 2021-22 report has commenced for initial survey issued to Audit Committee members, which you've all received. I'm pleased to report that the majority of members have now completed this survey, and we will be reporting back to a future meeting of the Audit Committee regarding plans to address any gaps identified, for example, training or changes to reports presented to the committee. And if you look at the detail of the report, there's 3 areas which come out where potential enhancements could be considered. So the first of those is looking at the assurance over third-party agreements, and the committee will have noted that those are now captured in the contract management system from Haley Holden's report, and we'll be using that to help inform our assurance work. Third-party assurance, so that's areas where there are other independent inspection authorities which look at the work of the council. So, for example, Ofsted looking at schools, or the Care Quality Committee looking at care establishments, and we use those to help inform our assurance work to make sure we're not duplicating effort. And we carried out an assurance mapping exercise to help capture all those independent assurance authorities and make sure they appropriately inform our work. And then there's a long-standing issue which the committee will be aware of about being a place on the committee for co-opted member, but there's been a lot of effort over the years to fill that vacancy, and that hasn't unfortunately been successful. As I said, this is the chair's report, but happy to take any questions the committee have.
Is there any questions that anybody's got for the chair first? No? Is there any questions for Geraint? No? And we consider the report noted. Thank you. We'll move on. Yeah, I'm sorry, Joe, that I missed it. Oh, Joe's there. Yes, got. Yeah. So Joe's doing item 10, which we may move on. Report of the Chief Internal Auditor.
No, that's Lizzie again.
That's Libby.
Sorry, Chair.
Sorry, Libby, I'm not trying to do you out of a job.
It's all right. I know Jo presents better and she's prettier to look at, but this one's with me, unfortunately. So on an annual basis, we give you an update as a committee on the level of fraud cases that there has been and to which internal audit has gotten involved in. We also highlight to you as well any cases of whistleblowing that has occurred throughout the year. So this report, as you will see, details the arrangements and the structure that is in place to prevent and to protect the organisation. And it also shows, obviously, our involvement in relation to benefit cases. So for the period of 1920, so that will be April, right the way round to March 2020, there has been 13 joint working cases with the DWP in relation to benefit fraud. Unfortunately, a lot of that work has now been put on hold. That was at the request of the DWP, as they are holding back undertaking any types of interviews under caution and so forth. We've had no cases of whistleblowing during that particular period. We are doing some work around whistleblowing to make certain that staff are comfortable with how to escalate or how to report if they need to. In relation to specific fraud cases, you will note that there are 3 that are noted down. They are predominantly in relation to direct payments and they are work in progress. We're unable to give you any specific details until they actually go through, but you will note that there is one particular case that was due to be reported to you where there was a custodial sentence which was then reduced to an 18-month suspended sentence. There's 3 ongoing investigations. Again, unfortunately, there is an impact in relation to COVID, and that's where information from external bodies, and when I mean external bodies, I mean a number of financial institutions where we're attempting to get hold of the information, but there is a delay. So it's not giving you cases, it's giving you an overview as to what we have or have not been involved in. There is a significant increase in the level of work around the National Fraud Initiative. At present, we can't go into the results of the NFI work specific to. However, we will aim to actually bring you a more comprehensive report by the end of the financial year. So I'm happy to take any questions that I'm able to answer in relation to investigations that we have closed. We'll not be able to divulge any information in relation to the ones that are currently in progress, but happy to answer any other questions.
Thank you, Elizabeth. I've got a question, if you like. With the council's distributing monies to COVID received from the government, whose job would it be to follow up any suspected frauds with that money?
There's 2 levels, Councillor Barry. We've worked very closely, my Portsmouth side of the equation, because we have a data analytic tool, plus obviously I have counter fraud resources on the Portsmouth side. So we've worked very closely with the council tax team, and we have analysed information or supported them in relation to some of the returns where they then suspect that there is a potential case and they suspect it may be fraudulent. They hand the case over to us to investigate. There were a number of returns that were required by central government. They are still ongoing, and those returns were to narrate the counter fraud arrangements that the authority had put in place, i.e. its checks and balances. So at the end of the financial year, so the reporting period for March, we'll have more information around those checks and balances and the results.
Sorry, who would bear the cost of the investigations? Because there must be a getting that money back or seeing that the perpetrator is punished. Who pays the cost?
Well, in the cases that we've had experience of, and I'm talking across the unitaries because I'm involved with a number of unitaries, where we have been able to follow through and recover the funds, that's what has occurred, and we have considered whether we prosecute. There is also, though, a national fraud police unit, which is called NATUS, which is working with NFI, and not in relation to the Isle of Wight, but in relation to a couple of other councils. We have supported and worked with them in relation to some organised crime. They are not in relation to the island, though. So in answer to your question as to who foots the bill for any additional work, on one level it is the authority, where it is to attempt to recover any funds if it thinks it has paid it in error or if it has paid it fraudulently. Where there is a national input, then those cases are referred to NATUS, as I've previously described.
Thank you. Are there any other questions for Elizabeth? Chris?
With these 4 cases, the investigations are being delayed. Are there any statutes of limitation related to this area? They go out of time?
There is an implication. At this stage, we haven't hit those thresholds. However, the implication for us really is that when we attempt to prosecute, if there is a significant delay, then that has a detrimental impact in that it's not then deemed to be perhaps in the public's best interest to proceed. So at present, certainly with the DWP ones, DWP are taking the lead, so we're guided by them, and it will predominantly be their cases that will be impacted upon if they can't proceed. In relation to our cases at present, we are certainly within our normal boundaries, but there may be an implication with what paths we have open and available to us at a later stage, but we're monitoring that.
Did Councillor Hobart have a question? Sorry, I thought I saw.
No.
I thought I saw your hand up. So right, if there's no other questions for Elizabeth.
Chair, I put forward in the chat box. I had a question.
Oh, I don't do that.
I put my hand up then, Chair.
That's it. Yeah. Go on then. Ask a question.
It was just in regards to whistleblowing. From experience of being a senior manager before I retired of a range of organisations, people do sort of whistleblow. Do you record all attempts of whistleblowing, or do you just record the ones that actually are legitimate whistleblowing?
Thank you, Councillor Lilly. The whistleblowing is predominantly recorded in two services, and they record all whistleblowing that they've received, and that is in the HR department or in legal services, and this has been historic. We've put in additional arrangements because i.e. from an audit perspective, because we now have a direct email inbox where, again, if people wish to raise via that means, but so far it records both sides of the equation, because very often historically the whistleblowing that we've received hasn't been whistleblowing, it's been a grievance, but they are still recorded in that way.
Thank you. That's a particular point I was going to sort of make. Just a supplementary to that, Chair, is there a mechanism of whistleblowing that comes externally, obviously from people in contractors, right, about perhaps to do with contracts that we might have, and someone in that organisation doesn't believe that things are being followed, you know, sort of external whistleblowing as opposed to internal?
There are boundaries around who can be deemed as being a whistleblower, but you are correct. If they are a contractor of the local authority and they are raising a concern in relation to their organisation, but connected to the authority, they can certainly raise whistleblowing concerns. They would raise them via the same means, and our policy covers, be it an agency member of staff, a contractor, our member of staff, and so forth. So it still gets dealt with in the same manner. The category which is very often misunderstood is when we may have a resident approaching us, and that is not a whistleblowing. And obviously, if that is the case, then we would explain accordingly. But in relation to your specific question, it's via the normal method.
Thank you, Elizabeth.
Thank you.
Right, is that noted? Item 10. Right, we'll move on to agenda item 11, corporate tax evasion policy. To approve the corporate tax evasion policy, the Chief Internal Auditor is in attendance to present the report. That's right.
Thank you, Councillor Barry. In relation to the corporate tax evasion policy, new legislation, you'll see from the report that has been submitted, was introduced, and fundamentally what the organisation needs to do is it needs to have a good framework and structure in place that enables it to protect itself, because the risk exposure that it has in relation to tax evasion is if we do not have good arrangements in place where we ask the right questions or perform the right checks, if there is a subsequent corporate tax evasion identified, we may become liable. So this policy really is to describe and guide as to what checks and so forth should be in place, how we're going to monitor the position, and obviously where we need to report things. So this is a new policy that's being introduced. Hopefully it is reasonably self-explanatory and gives guidance around particular areas that are deemed to be of slightly higher risk where this may occur. But as I said, from an organisational perspective, it is about the authority having a sound framework in place, carrying out monitoring when it needs to carry out monitoring, and being able to protect itself that in the event that it may occur, whilst it wouldn't be the authority that would lose the funds, it is whether the authority has sufficient arrangements in place where it can robustly push back and say, we did all that we could to protect against this. So I wasn't intending specifically going through the policy. You will note that it is very key that the likes of the lead on tax is involved, which is where Jo does come into the equation, because obviously she oversees tax and so forth. So it is good that as a point of contact, well, we've got somebody on the audit side and somebody as well on the VAT side of the equation. So, Chair, without going into any other details, I am more than happy to answer any questions.
Thank you, Elizabeth. Are there any questions for Elizabeth? Right. This is something that we've got to take a vote on to approve corporate tax evasion policy. The clerk will now take the vote.
I'm happy to propose. Do we need a proposer and seconder, Chair?
Yeah, proposed. Seconded by Chris Quirk. There's one more for Lily. Yes.
I propose Councillor Lilly.
I second Councillor Quirk.
That's right. We're now going to take the vote. Aye.
Sorry, I can't hear. Could you speak up a bit?
Councillor Axford.
Yes, approved.
Councillor Hobart.
Approved.
Councillor Kilpatrick.
Approve.
Councillor Lilly.
Approve.
Councillor Quirk.
Oh.
Thank you. Thank you, Lottie. Right. Item 12. The report. To note the report of the technical finance manager, and this is definitely Joe's. Thank you, Joe.
Thank you, Chair. Yes, it is definitely me, and you will see whether I am a better presenter than Lizzie, which I don't think I am, to be honest. This report is a regular half-yearly progress report on Treasury management activities for the Isle of Wight Council. It's presented in a standard format. Sorry, my other screen has just decided to die where I put my notes. It presents Treasury management activities for the half year to September 2020. In an environment of continuing low interest rates, very little impact of negative interest rates other than the Central Government Debt Management Office, which is now offering negative rates for deposits of less than 2 months in duration. So we're not using the Debt Management Agency for any of our deposits at the moment. As a result of this, we have agreement with the Section 151 officer to temporarily exceed some of our counterparty limits when we have unexpected surplus cash above what we can manage within our existing counterparties. But we are in those circumstances looking at the security of those deposits and making sure that our money is not at risk. We do have significant surplus cash balances at the moment, and we do have quite a level of short-term temporary borrowing. During the last 6 months, we have investigated whether we could repay some of our short-term borrowing with our surplus cash. But unfortunately, the borrowers, the lenders that we've been engaged with are not interested in having their money back because we give them a better interest rate than their other deposits would do. For members' information, the table on table 7 on page 368 is incorrect. The borrowing figure should be 279.3 million, not 379.3 million. But the total figure is the correct number. I'm happy to take any questions that members may have on the report. Otherwise, move the recommendation to note the report, which is on page 358 of your packs.
Thank you, Joe. Are there any questions for Joe? Adrian.
Thank you. Yes, most of this meeting has been taking up with things which ended back in March of this year. We're finally getting onto something which is during the current year. My question really is at the bottom of page 356 on item 14. You're saying that we've saved money as a result of not undertaking as much short-term borrowing as forecast. Could you just give us a little bit of background on that? Have we had extra money coming in or paid less out?
Thank you, Councillor Axford. Yes, we have had additional money coming in through central government grants in respect of COVID-19 relief activities, and those grants have been paid out, but not in immediate vicinity of receipt of payments. For example, the business rate grants, we received £62 million from central government, and over the last 6 months or so, we've paid out about £48 million of those over a period of time. So we've had money coming in that's been sat ready for us to pay out, but haven't had to pay it out immediately. So we haven't therefore had to borrow as much short term to replace borrowing as we'd previously anticipated.
Okay, thank you, Joe. Before we move on, Chairman, I'm getting all sorts of squeaking noises in my ears. Could you ask everybody to turn their microphones off, please?
I think nearly everybody has. Adrian.
Okay, thank you.
Are there any other questions for Joe? Right, and I'll we note the report and move on to agenda item 13. We note the report of the internal audit progress report. That's the Chief Internal Auditor, please.
Thank you, Chair. Committee, this is the standard report that we bring along to you so that it narrates the position in relation to the audit plan, and it also highlights any particular results that we have following undertaking our reviews. There are a couple of changes obviously to the plan. That's because we needed to keep the plan very flexible. But if I take you through a couple of the key areas, so you will note on page 378, we have 64 audits obviously in the plan. So there's been a small increase. That will change and it is likely to decrease. And that's because there are some pockets of work that it's going to be very impractical for us to do because of the restrictions around COVID and because of resource pressures within some of the directorates. Moving on, we then come to page 379, where we give you some of the results of the audits that have been completed. The direct payments one is one of 2 reviews that were outstanding from last year. The final one, which is to do with community funerals or public health funerals, we will look actually to report to you next time, and it is the last one from the 1920. However, this particular review, which is direct payments, was carried out, but we had to hold on some of the pockets concluding the work. You will note from the narrative that's contained within here, the exceptions that we have raised are predominantly around the not meeting the timeline in relation to assessing whether the direct payment funds that are given to clients have been spent in accordance with their terms and conditions, and there is a delay. You do on the Isle of Wight, though, have a significant amount of cases. There were also some issues around where there is a surplus balance and the monies have not been spent. There is a policy where when they get to a particular level, they need to be repaid. And again, there were some minor issues around when we kind of reclaim those funds. And there were some additional elements as well in relation to checks and balances around personal assistance, signing agreement and consistency of documents. Moving on in relation to freedom of information and subject access requests, you'll note again this audit has got limited assurance. Fundamentally, there is a lot of legislation that sits underneath those two areas, and there are statutory time frames that have been established that unfortunately aren't met. I haven't found any council that meets the statutory time frames, and anybody that's had any experience in relation to subject access requests know that they're immensely time consuming. So unfortunately, it's an area that's quite difficult to be able to comply with due to the nature of what it is. Isle of Wight do have less resource than what has been identified elsewhere, and we believe that that is probably a contributing factor. There was also some issues around the publication of some of the data in relation to FOIs and how easy it was to obtain that information. Moving on, we also have the school landlord responsibility, which has limited assurance, and this is where it's not the local authority that is accountable or responsible. It actually falls with the schools and the governing bodies. However, for schools that are maintained schools, there is a requirement for them to submit centrally to the property team the confirmation that all of the relevant compliance checks have been undertaken. Our findings from our review would indicate that despite numerous checks, that is immensely difficult to try and obtain the information, and hence we have raised a number of exceptions around this area. All of these three reports were presented to CMT. CMT have been very supportive and have acted in conjunction with any of the relevant directors to make certain that there are sound arrangements put in place. And I know that Chris Ashman is also in attendance if you wanted to have any specific queries, particularly in this area. It needed joint working, obviously, across the authority, because this isn't all down to property services. They're doing their utmost, and the level of chases that they had been performing was quite extraordinary in some areas, but ultimately they still weren't getting some of the information. If I continue through, on page 382, you'll notice that you've got the grant verifications. For grant verifications, they either pass or fail, and we will present those to you. So we've had the disabled facilities and the Lifeline grant. Then we move on to modern slavery and schools financial value standards, which I won't go into the detail, both of which were coming out as reasonable assurance. And then we have contract monitoring agency and bus services revenues grants, which is on the page that follows. Debbie had already mentioned in the annual governance statement some work around follow-ups, and you'll notice from page 385 onwards, is that we're giving you the results of the follow-up audits that have been performed, and you can see for the likes of the very first one, domiciliary care, that the first level there was reasonable, and now we've been able to move it to assurance, specifically for the areas that we had tested. The same applies for Treasury management. One of the things that we do find, or I certainly experience, is organisations sometimes have problems implementing or doing what they say they're going to do. There's been a lot of work undertaken at Isle of Wight and reporting through to CMT, where there has been very good focus, and you'll see that there is some positive results with things moving forward and things moving from various colours to green, which I think is a very good step. If I come right to the end, which is 390, and it's the remainder of the report, this narrates the audits that we had in the plan and their current positions. And it is here that you will see that there are two audits that are noted. One is housing benefits, and the other is the island plan, where we have noted them as being suspended. Suspended being that they are going to come out the plan for this year. The rationale and the motivation around that is housing benefits had full assurance, but because of the monetary value that is attached to it, is an area we generally look at on an annual basis. But I have performed an assessment and reported to the Section 151 that I would be comfortable not performing a review this year, due to resource implications and focus really needing to go elsewhere. In relation to the island plan, again, there's a delay in relation to the island plan and the requirements that sit behind it. And for that reason, it is an area that can get lifted and put into or be considered for future considerations. I haven't highlighted other areas that are likely also to have an impact, but as and when those come up, I will bring them to your attention once there's been a final decision. So, Chair, I'm happy to take any questions anybody may have. Geraint may also support, and Chris is here if you wanted any further narrative around the robust action plan, to which I know Chris has led on with education and with corporate services.
Thank you, Elizabeth. Are there any questions for Elizabeth or Chris or Geraint? Councillor Lilly.
It was more of a comment, Chair, but the area that does concern me is the freedom of information requests and area, and actually the link to the island plan, because I do know that there's a huge amount of FOIs, particularly going in areas to do with large planning applications for housing. I know this from my own residents who are putting in a lot of FOIs. And it does relate often to, in this case, to planning or planning issues. My concern is you know, to me, if we get to actually residents putting in FOIs and the considerable, I know that there's a very high number of these going in, shouldn't we be looking at how to avoid getting to the level where residents actually feel they need to put in freedom of information thinking how can we reduce those numbers, because I know there's considerable. I know 10 have gone in this week just in my area alone, right? So I can and I totally understand the capacity levels of the staff, particularly through COVID, to deal with that. But if you've got to still have planning applications going in and they're very large and they're controversial, then you will get people putting Freedom of Information Acts, in information requests in. I don't know the answer. I'm just saying that it does really concern me that we have the level of FOIs that are put in on the island.
I don't think that's a problem for this committee, though.
I'm raising it in the context that it within audit. Yes.
Elizabeth, do you want to?
Well, the only thing. Oh, I was going to say, well, the only thing that I was going to say, and Geraint may well come in, is that there is a balance between the information and the timing of the information. So when the information is appropriate to go out in the public domain, and the level of that information to go out in the public domain, and we can probably end up going from one extreme to the other, where we end up with so much out and on our website, which then is labour intense to keep updating. So there is a little bit of difficulty. I think if we can clearly identify, if you believe that there are certain pockets where the information most definitely should have been, or it is an efficient method and compliant with the transparency code for it to go out there, then again, it's probably about the balance. But what I would suggest is perhaps if there are specific cases, that those are flagged to see whether they were instances where the information was appropriate in the first place to have been displayed, if that makes sense. Geraint, I didn't know if you had anything else you wanted to add.
Yeah, I was just going to talk about what Councillor Lilly was saying about proactively publishing information. This is also covered under the FOI legislation, and there is a wealth of information available on the council's website. A category of information which is often published and is present on the council's website is answers to FOI queries which have already been posed. So that somebody, ideally, if somebody is looking for information from the council, their first port of call should be the council's website to see if that information is already publicly available. As I said, there's a wealth of information on the council's website. It is not always terribly easy to find. And the committee may be aware that the council is currently going through a process as a project up and running to do a new website for the council, which is also linked to some other legislation which has come in regarding how accessible council website and mobile apps are. And I'm actually looking at that. I've got the working papers open in front of me, and I'll be carrying on with that once this committee meeting finishes, and we will be able to report on the conclusion of the fieldwork to March's meeting of the Audit Committee. And part of that, the scope of that review, is to look how well the council is proactively publishing information.
Thank you, Grant. Councillor Quirk.
Thank you.
Councillor Quirk. Chris? Can you what? That's it.
Yeah, sorry, it wouldn't unmute. Just a comment about the freedom of information requests. Some people use freedom of information requests as a way of sort of objecting and causing issues. And very often in the planning situation, the answer is actually there on the website, and you have to eventually point people to where they are.
Thank you, Chris. Can we then note the report? Is the report noted? Right, we'll move on to members' question time. Last item on the agenda. Are there any questions? We've had no written questions, so no questions? I'll then close the meeting. Thank you all for attending. I hope all goes well. Thank you.
Thank you.
Thank you.